Hello, everyone. Welcome back to another episode of the DBT podcast. I am back with my co host, Roshan. And for this episode, we have a guest, special guest. His name is Mitesh Koirala. And I'll have him kind of talk a little bit more about what he does. But he is the founder and chief operating officer of Karma Mortgage. And Mitesh, I'll have you talk about yourself and maybe a quick intro.
Sure.
Welcome.
Thank you. Thank you, guys. Thank you, Roshan. Thank you, Sujan. Great to be here. Thank you for the invite.
Yes, sir.
So, again, my name is Mitesh. I'm the founder and CEO of Karma Mortgage. I've been in mortgage industry for almost a decade now. And we are licensed here in Texas, in multiple other states, including California, Colorado, North Carolina, Virginia. So anyone looking for, any kind of loan, especially we specialize in residential, but we also offer commercial loans. So if you need any kind of loans, we're here to help. And I'm also involved in Nepal Chamber of Commerce here in Dallas. I'm the current vice president of the organization.
Nice. Thank you again for joining us today. We usually shoot our podcast on the weekend, and for him to give us some time, these are the busy time that we are usually with our families and all that stuff. I really appreciate Mitesh's time here. We want to go with the basics. On what you started your career on. I saw somewhere that you were a chemist before you were in lending part of it. So let's just start with that chemist part, and then we'll move on with others. Tell us more
Probably
about
the first chemist I've met in my life, by the way. I don't think I've met any other chemist or former chemist in my life.
What does it come in your head when you say he's a chemist?
I just imagine him with like white coat at a lab, just, with beakers, just kind of mixing, I don't know, with like those protective glasses. I don't know. That's what I imagine. It's just
what is
you
a
see.
chemist?
You probably imagine Walter White from Breaking
Yeah.
Bad.
It's the Nepalese Walter White, man.
Nepalese Walter White, right? He's about like
nice.
Nice. Okay, so like you guys said, when I graduated, I graduated with degree in biotech with minor in chemistry and microbiology. And deep down in my heart, I wanted to, open up my brewery and brew my own beers and stuff. That was my, passion when I was going to school. And once I graduated, my first job I landed was as a chemist. So basically, I was testing for, arsenic, selenium, basically everything you see in the periodic table. I would test it in soil and water and make sure the water is safe to drink, the soil is okay to grow the plants and, build a house and whatnot, So this was back in 2011.
Wow.
And I did that for a couple of years, and I got promoted to supervisor, chemist, and then I became a manager of the same lab. And somebody reached out to me via LinkedIn and offered me a lab manager role in Louisiana. At the time, I was in Houston. So I got married, and I ended up, moving to Louisiana to run an environmental lab. And I was working as a lab manager for, good 2 to 3 years. And, I bought my first home in 2015. And, the realtor who was helping me and the loan officer who helped me to purchase my home, I was really impressed by the work they did and how they helped me and everything. And I was like, this is a cool profession, to be in real estate. And life eventually got boring doing 9 to 5, even though I was making good money, as a manager, I would just go at the office, sit at the office all day, basically. When I was a chemist, I was enjoying it because I was hands-on. I was testing things, doing this, doing that. But as a manager, life started getting kind of bored. So I was like, let me get into real estate. And I got my, I went to school for becoming a realtor at the beginning.
Oh, wow.
And I passed all the exams and everything. And I realized, being a realtor, you have to, go meet the clients. You have to
drive them around,
drive around town, and I was like, I can't do this. But for me to be able to do the loans, I can just be on the computer. I don't have to travel. So that would be in line with what I was doing as a manager. So I make another shift and got the loan officer's license and started doing real estate and finally made it a full-time career. So that was a transition for me.
Wow. And I don't know if you guys have noticed, but Roshan is wearing,
Thank you for this.
Karma Mortgage
Thank you.
hat.
Yep.
So
Thank you for wearing.
Yeah, that has got us the whole goodie bag of like a whole
we have
bag.
2 big goodie bags that we got. So thank you for
You're
doing
welcome.
that. And once again, thank you for making the time to kind of speak to us. So, so you did, you were a chemist for some time, then you did some management, then you went into real estate, and now you're in lending, right?
Yes.
So I think the first question is, with the market kind of uncertainty going on right now, like what are the things you're seeing in lending right now? Are you still seeing a lot of people buy homes?
Oh yeah, I mean, so there's 2 aspects of it, right? So if you live in an apartment, you're a first-time home buyer. It's always a good time to buy a house, right? Versus you already have a house and you're an investor, then you start evaluating, is it a good time? How much what the rate is, what is the house price, how is the market doing, is there a cash flow on the property, so all that things kicks in as an investor when you start adding more properties, is building your wealth. But if you're a first-time home buyer, it's always a good time. And yes, people are still buying homes. Even from the investment side, you can always find motivated seller who want to sell their house. Sometimes you get a good deal. So and then investors jumps in as long as they see a good cash flow on it. So.
Got it. And you're doing mostly residential, but
Yes, mostly residential, but we do have commercial investors as well. But it basically depends on the project.
So what are the products that you guys are doing in terms of loan? I know inside residential as well, like there are people, if you are currently in apartment, they would want to know, there's a lot of acronyms in this industry as well, FHA, VA, conventional, right? So what are those, and like what are the things that you offer as Karma Mortgage?
Sure. So basically, we offer everything, right? So we offer regular conventional FHA, VA, USDA. That's with any lender. Any kind of loan that's out there. We work with more than 100 different investors. And everybody has their own niche products and things to offer. And we as a mortgage broker, that's the best part of being to work with a mortgage broker, rather than going directly working with a big bank or one institution, because we get to have all the product lines that everyone offers. So we do offer all the regular government loans, conventional loans, and on top of that, we offer some niche product, especially for the business owners, like
Nice.
bank statement loans, profit and loss statement loans, 1099 only loans, We offer DSCR, debt service coverage ratio loans for investors. So regardless of what your income is, if you're looking to invest, if you're not a first-time home buyer, you want to add some properties under your investment portfolio, then regardless of how much money you made last year, or if you're employed or even unemployed, we can still get you the house if you come up with at least 20% down.
wow.
On
You can buy a house even if you're unemployed?
Correct.
Wow.
Yes.
So
For
how
the
do you
investment
secure
property.
that loan?
Wow, that's
So basically, these loans are on the investment sides, right?
Okay.
So you need to have 20% down.
Okay.
So that gives the lending institution some guarantee, right? So at least they have 20% to go after if something unpleasant happens.
So is there any clause on that? Like it's very interesting to hear that.
Yeah, so the clause is basically these are for investment projects, right? So let's say you buy a house, let's say $300,000 house, you put 20,000 down, so you're getting a loan for 240,000. So what the bank is looking for, or the mortgage company is looking for, is how much rent can you generate from that
Okay.
from that property.
okay.
Nice. So it's not for the first time home buyer.
Yeah, it's not for the
These
first time
are
home buyer.
investment.
These are only for the investment.
Investors.
Got
So
it,
they
got it.
actually don't offer these to first time home
Yeah.
buyers.
That would be crazy.
Yeah, that's what I was. So yeah, that's an important clarification. So I think the way we want to structure this is, we want to ask you some questions that might pertain to first-time home buyers, and then maybe a second half of this we can talk about investment,
investment.
Sure.
buyers and kind of things like that, right? So, walk me through. There's so many videos now online that you can see of financial gurus that are giving you advice. Hey, you can go and you can buy a house if you just take your 401k and then you put that as down payment and then you can buy a house. And I know there are a lot of advice out there, right? So maybe a good starting point is, what does a home buying process look like from a lending side, right? So let's say Roshan is my realtor. He and I have a house picked out, right?
Yes.
And I want to buy a house. What happens next?
Okay, so first thing first, I mean, you need to start off with a pre-approval, what we call a pre-approval, right? So that's basically you getting with the lender and saying, hey, I want to buy a house. These are my finances. These are my credit. This is my down payment that I have. It can be, like you mentioned, it can come from your 401k. You can take a loan from that. Or it could be your savings. It could be any stock asset that you may have in Robinhood or, any other platform. So
What about Bitcoin? Sorry to cut you off.
Bitcoin, yes. These days, yes.
Wow, you consider those to be
Yes.
even with the volatility.
Yes.
Because we saw it go from 84 to less than 60
Yeah.
in the past week, right?
Yeah, as long as you can cash that in and bring that, into your checking account
Wow, okay.
before your closing.
Yeah. So I guess anything you can
Liquidate, yes.
Okay.
Yes, you have to come up with the documentation to source when you bought it and whatnot.
Sure.
Just like bank statements. But as long as you can do that, you can use it.
Okay.
Before you couldn't with the crypto, but nowadays,
That had changed.
given how popular it has become over the years, lenders consider it. So.
Got it.
So yeah, going back to pre-approval. So you talk to lender, you apply for a pre-approval. Basically at that point you would say, this is my income, this is my job, or you could be self-employed, whatever the case might be. They would ask for your standard documents, your pay stubs, your tax returns, W-2s, 1099s, and they would run your credit and calculate what your income is versus how much debt you're getting, right?
Sure.
So in lending terms, we call that DTI, debt to income ratio. So as long as your income supports the amount of debt you're taking, the lender is gonna pre-approve you for that amount. And they will issue a pre-approval letter, and at that point you would talk to your realtor and go house hunting, right? So you would place an offer, and once the offer is accepted, you come back to the lender and say, hey, you pre-approved me for $300,000 house. I have it on contract. Let's move on. And then the lender actually collects further documentation and send the loan up to underwriting, and he handles everything from underwriting, processing, employment verifications, ordering the appraisal, getting in touch with title company, and they will help you to the closing table.
So how complicated is the home buying process for a first-time home buyer if they are self-employed versus they're traditionally employed through like a W-2?
Yeah, so the complexity again boils down to who you're working with, what kind of company you're working with, what kind of realtor you have, how professional, how knowledgeable they are, how helpful they are, do they know their stuff, lending institution wise, it's I might be biased. I'm a mortgage broker, so if you work with a mortgage broker, it's much easier than working with big banks and big institutions because, you call me Saturday, 10 p.m. I still pick up my phone and I'll answer any question the buyer may have. I can work Sunday afternoon, versus somebody working at the bank 9 to 5, not going to do that for you.
Sure.
And these big banks and big institutions have stringent underwriting guidelines. They would ask for more paperwork. They would drill down everything with fine lenses, and some investors are more relaxed, and to answer your question about, being a W-2 employee versus self-employed, I mean, it comes down to the income they are making, regardless if they are self-employed or W-2. But paperwork-wise, it's much more cleaner and easier if you're just W-2, because all we need is your pay stub and your W-2 and you're done. Versus,
Self-employed is.
Yeah, self-employed, like Right now, I have a client, and this individual has over 52 businesses.
Wow.
Does
And
he have to show all 52, or he can just show one if it supports his capacity to buy
it
a house?
depends on the loan program, right? If he's buying an investment home, bank statement loans, profit and loss kind of products, one should be good. But if he's applying for a regular conventional or FHA loan,
All 52.
all 52, because what end up happening is they would submit their personal tax returns,
Sure.
and it will have a list of every business he owns.
Yeah.
Schedules,
The-
yeah.
they call it
And the
K1
underwriter is
or
going to
something.
ask for, hey, let me look into this, let me look into this, and so
You have to give their personal tax
Yeah.
return and all. Man, he has
business?
52 business.
Wow.
Yeah.
So he's doing 52 tax returns, 52 K1s, 52 banks accounts. Oh my.
Yeah. Advice to our audience: don't open up 52 businesses if you plan
And get the conventional loan.
if you plan on
Yeah.
buying a house.
No,
yeah.
you can, but there's a creative way of doing
yeah.
it. So there's alternative programs.
That sounds tiring
yeah.
though, like just hearing about it, you
Yeah.
know? So
Yeah.
I think to add on that, for the first time home buyers, like what Susan was mentioning earlier about, hey, there are a lot of financial gurus and all that stuff, right? And this is the terminology or the term that we hear a lot: marry the house, date the rate, right? What does that mean for the first time home buyer? How do you explain that?
Okay, so basically, thank you for bringing that. That's a really nice topic, and I think we can address that. So marry a house, date the rate. What that means is whenever you buy a house, right? There's a sales price associated to it, right? So right now, let's say we're in a high rate environment, right, compared to what it was 6 months ago, with the Iran war and the economic outlook out there. Rate has slightly climbed up, to mid sixes
Inflation
right
has
now.
gone up.
Yeah, so what end up happening is, anytime the rate goes up, less people qualify for mortgage,
Sure.
because higher rate means higher payments. Higher payment means you need to have more income to qualify that, right? So always higher rate is, less buyers, right? Because less people qualify and people tend to wait. If I'm comfortable $300,000 payment, then I want to wait for that interest rate. You don't want to wait, but people normally thinks that way, right? Oh, let me wait once the rate goes down, so my payment could be 300,000. But what end up happening is, let's say today's market, when the rate is 6.5%, a house sales price is 500,000. Let's say this is just an example, right? So something happens in the news tomorrow. We have a peace deal with Iran. The inflation number comes down. For whatever reason, 6 months from now, the rate went from 6.5 to 5.5. So there's a 1% decrease in the interest rate. Every 1% decrease in interest rate would bring, don't quote me on this, there's a number, but there's several millions buyer all of a sudden becomes more eligible to loans.
Okay.
So the pool of buyers suddenly goes up.
Yeah.
And all of a sudden now there's a demand in the market. Now for the same $500,000 house, since the demand is high, since there's more buyer, now the sales price is going to go up to maybe 525 or 550, depending on how bad the demand is.
Yep.
So now you end up with 5.5% rate, but now you're paying $550,000 for that same house.
Yeah.
The payment's not going to come down.
Yeah.
So let's say you buy that house
Right now with
right now.
500,000.
So if you buy that house at a 6.5% environment, you lock your sales price at 500,000, and then when the rate goes down to 5.5, you can refinance it.
Yes.
So you end up getting 5.5 regardless. And as a good deal, you bought the house for 500,000.
And it's gone up in value
Yes.
too when that
Yes.
interest rate.
You're
dropped.
double dipping on that.
Yes. Yeah.
It might be the short term thing might look like I'm paying more
Yeah.
in terms of like, hey, I'm paying the higher interest. But looking at it, so basically dating the rate means you can date somebody else after a while is what it means.
Yeah,
right?
exactly.
What are we at? Like, we're a dating podcast now.
Yeah.
All right.
So that $500,000 house you just married, right?
So you guys are giving advice that you can date as many people as you want.
Not.
So
I
you're
mean-
basically saying tomorrow when somebody better comes, just ditch this one.
Oh, yeah.
And go. Okay.
So I have a client, right? So I have a client who I refinanced for 4 or 5 times.
Wow.
Wow.
But doesn't it cost money every time to refinance?
Good question. We take care of all that.
Wow.
Yeah,
Okay.
we give you lender credit. So again, Karma Mortgage, we are like the top 1% broker in America with the biggest mortgage company in the country.
Wow.
Nice.
So the largest mortgage company is UWM, and we're their 1% broker. So we get special pricing,
Oh, very
and we give them the credit. There's some cost with the refinance, right? There's title company cost, there's underwriting fees and things like that. But whatever we get is an incentive from the lender, being the best. We return that to the borrower. We basically give them the lender credit to cover all the costs.
Is there a certain year that you have to do it within, or
No, you
wow.
can do it anytime.
nice?
Anytime, just like dating, right? You find a better girlfriend.
Dude, you guys are both married. This is
Yeah.
horrible advice.
No,
I'm
so
kidding.
basically, as long
We are
as
already. If you are dating, is
Your
what it
wives
means.
are watching these podcasts saying, wait, what is this advice?
so in terms of rate, right? So if the rate is attractive,
Yeah.
you can always refinance.
Yeah.
So
I mean, I think that's fantastic advice. I wanna ask on the rate itself. A lot of what we're seeing now, or maybe let's take a step back, right? So going back to buying a house, a lot of people try to save up that 20% to buy a house, right? They say, hey, I need to have 20% to buy a house. Now we know that you don't need 20%, especially if you're a first-time home buyer.
Yep.
But that's a big kind of knowledge and information out there. Is, hey, I want to save 20% because 20% is the mandatory minimum. So I want you to talk about that and some options those people have and why that might be a bad idea looking at financially, given how long it takes you to save that 20% versus buying a house and looking at what that house could be worth by the time you save that 20%.
So, yeah, I mean, that's another myth, that we want to bust, right? You don't need a 20%. So if you're a first-time home buyer, you can come up with as low as 3% down, right, on a conventional loan.
Got it.
You can come up with as low as 3.5% down for FHA loan. If you have served the army, you're a veteran, you can even do a 0% down on the VA loan, right?
Yeah.
So, talking about, if you want to wait until 20% or do you want to buy now with the lower down payment, you have to think it this way, right? So if you come up with anything lower than 20%, you have to pay something what we call the PMI, which is a private mortgage insurance. That's to secure the lender in case of any default, right? So, but if you wait, so even if you're paying the PMI on a conventional loan goes away once you hit that 20% equity, right?
Right.
So that's not permanent. If you have a FHA loan, depending on how much down payment you have, there's either you pay the PMI for the life of the loan or you pay for certain years, right? But you can always refinance to get rid of that once you have enough equity. But if you wait to come up with 20% down payment, you're paying what, $2,000 rent at your apartment. That's $24,000 a year. If we wait 3 hours, that's $75,000 flushing down the toilet.
3 years,
I mean, you're paying 100% interest rate, with the rent.
Yeah,
So it's definitely a good idea, especially if you're a first-time home buyer living in an apartment or renting a house. It's always a good time. In that 3 years, you could turn that $75,000 into equity into your home.
Okay.
You can get rid of your PMI,
Yeah.
in those years. So
Yeah. So what you're essentially saying is, instead of taking the time to save up, and while you save, that house is increasing in value
Right.
anyway,
Yes,
right?
yes,
So
yes.
essentially, you're gonna now need to. Let's say you're buying a house for $200,000 today, and you want to save up 20%. That's $40,000. In a year, that house might be worth $220,000.
Right.
Now you have to save up $44,000 instead of $40,000,
Yeah.
right? So instead of chasing that, it's better to buy the house
Yes.
now
Yes.
And then, if you have to pay PMI, just, either you wait until that you build enough equity in the house
Yes.
to get that PMI to go away. So that makes sense. On the other side, one of the other things I've seen is, and these are like, I think like special rates. We see these things, especially for first-time home buyers. We see special rates where even though right now, let's say your market rate is around 7%, APRs, these special kind of financing options with new builders, they're offering somewhere around 2.99. They call it ARM, right?
Yeah.
So talk to us a little bit about that, because people are still able to buy homes for much lower interest rates. What's the there's always a pro and con, right? What's the pro and con?
So basically, what happened was, these things were not popular, until the rate went up, right?
Right.
So what happened was, rates were, I have few houses. I have rate in 1.99.
Oh, wow.
I have rates, below 2%.
Nice.
And
Free money.
Yeah, So I bring that up just to give an example. There's a lot of, I have a lot of clients. I started mortgages, prior COVID, like since I think it was 2018, and rates were in the 4s and the 5s, and then climbed up slowly. But when COVID hit, rate came down to like 2s and 3s.
Yeah.
So we refinanced all our past borrowers, right? So people were kind of used to of that rate, right? Fast forward, past COVID, all of a sudden rates start going up,
Yeah.
right? And who did it hurt most was the builders who were building these new houses.
Yes.
Because nobody would touch their house.
Right.
Rates were in 5s and 6s and 7s, and
Yep.
So, this buying and selling kind of stalled because people were used to listening, hearing rates were at 2s and 3s, and all of a sudden, they go and buy and rates are at 6%, 7%.
There were like lines in the builder's
Yeah.
office when the rates were down, right? In COVID, the house will come.
I remember we were shopping for homes, and like during COVID, we were like, hey, now might be a good time to buy, and builders were saying, hey, it's by appointment only, and the
Only,
next
yeah.
available appointment was more than a month out.
Or
Yeah.
6 month. I've seen 6 month out. I've seen people like, hey, we're moving out new homes. I've seen people wearing like, when new watches come in or new shoes come in, how people line up. I've
overnight.
seen it in Leander, like in Santa Rita Ranch. I was in one of the lines for one of my clients.
Okay.
During that time, right? So I'm sorry to cut you off.
Benefits of being a realtor, you do all of that.
Yeah.
I've had people, like friends, buy homes without even looking. Just they were like, hey, I'm gonna take it. Whatever you have available, I'll take it. I mean, I've never seen.
Yeah, it was crazy.
Yeah.
There's a hole in the roof. It's okay. I got it.
Yeah, I'll fix it after I buy it. Right?
Yeah.
So, builders were having hard time to sell their products, right? So what they came up with was, let's say, they have a $500,000 house in the market. People always negotiate, right? I mean, you always negotiate as a realtor, right?
sir.
Trying to get the best deal to your buyers, right? So you go and, offer that house $450. And the builder would say, okay, we can close this deal in $475 or whatever the number is. So builder, rather than, giving a $20,000 discount on your sales price, they put that discounts towards the mortgage rates. So rather than giving the house at 450 or 470, what they offer was, they probably cranked up the price as well. Let's say this house is now $520,000, but we are offering 2.99. And how they do it is, the rates are the same for them too. What they do is they use their money to buy down the rate so that the buyer gets the low rate.
Yep.
Right? So it's I don't know. I don't want to call it a marketing gimmick, but they're just making the deal sweeter.
Yeah.
Sure.
And they definitely are making it.
Yeah.
Right. And I think with everything, like we had that, I say COVID high in terms of interest rate. Everybody's like, in terms of selling the house or also buying the house. In COVID era, there was interest rate this much, and seller is like, oh, my neighbor sold the house in this much, but the time has been totally different in all the aspect of it, right? So I think the rates they are like, it's a marketing technique for them just because they're investing that money to build that house. Right. And there's a running income or operation expenses that they are using it. And I think they are using that like, okay, rather than putting it in market, having the lights bill paid off and all that stuff, why don't we put this money out and offer more interest rate? And I think like you mentioned earlier, right, having that 1% down, it brings millions other buyers so that they can bring that pool of buyer in that. And I think that's one of the reasons that real estate market is still like kind of not in a crazy dip, right? So I think now we can switch back to the investor side of it.
Yeah, I would say maybe a few yes/no questions for you. Rapid fire yes/no questions. Okay. And then we'll shift over to some maybe investment related questions.
So no explanation, just yes or no, right?
Just yes, no, or if you want to quickly explain maybe in a few words, you're more than welcome. You know, I don't want to handcuff you in any way. So one we talked about is a 20% down payment required to buy a house?
No.
Should people wait for mortgage rates to drop below 6% before buying?
No.
Is it better to buy now or wait until the market corrects?
It depends. Like I said, if it's a first-time home buyer, always a yes. If you're an investor, look into the cash flow.
Always call the lender first,
Yeah.
whether it's good or not.
Okay. Should you be shopping around with lenders?
Yes.
Okay. Is an adjustable rate mortgage a good idea?
Yes and no. Depends on your goals, how long you're going to be in the house, how much discount you're getting an ARM compared to a fixed rate. So yes and no.
Okay. Does a credit score below 700 kill your chances of getting a good mortgage?
No, you can still get the mortgage. You may have to compromise on the rate. Your rate going to be slightly higher compared to somebody with the 800 score, but you can definitely get a mortgage.
Okay. Should you pay off all of your debts before applying for a mortgage?
Yes and no. You don't have to pay as long as your income is good to cover all your debts. But sometimes, you may have to pay to get your DTI down.
At least some of it.
Yeah, at least some of it.
Okay. Can I buy a house if I have student loans?
Yes, absolutely.
Okay. Is it worth paying money to lower your interest rates, or what they call buying points, right? Is it worth doing that?
It depends. Again, the lender can advise you on your particular scenario. Again, how long you're going to be in the house, what the economic outlook is, what kind of rate environment you're in. Talking about that, we have something called temporary rate buy down that could benefit a borrower. So again, yes or no.
Okay. Is renting always throwing money away?
Most of the time, yes.
Nice.
Okay. Maybe the last question for you, right? This is a little bit, we always talk about our food, right? Dal bhat, we talk about dal bhat. Is dal bhat the best fuel for closing deals?
Yes.
I like how you think
Yes.
for a while. Like, should I say no?
No, I was trying to think.
We would have ended the podcast. That's it.
I was trying to think when was the last time I took my client for a dal bhat lunch after a closing, and I could not remember.
Oh
one,
man,
so.
that's not good.
That's because I typically don't attend closings, because there's a lot of behind the scene kind of things you have to sit in your office and do it.
Yeah.
But I may have to start doing that, especially for the Nepalese client, take them to a thali lunch,
Yeah. So I mean, I think since you are running this big company, and I know we talked about going into the investment side of it, my question is like, there's a big competition out there on this industry, right? How do you stay accountable, and how do you make yourself available with the market, with so many lenders out there? What are the successful business tactics? I mean, don't open all the secrets, but what do you think have made you afloat on this business? I've seen so many lenders come and go.
Yeah.
But for you to stay for 10 years as a broker, that means something, right?
Yeah.
So what do you say about that?
So it's you have to gain credibility, and you have to be accountable, right? You have to be reliable, And over the years, what I have done is, the people, the realtor, the clients that I've worked with, I have built trust. When I say I have built trust is, let's say I've been working with the same agent since when I started,
Wow.
since 2018. And once they refer the client to me, and I jump in, I come into the picture, they don't even call me to say, hey, what's going on with the mortgage?
Yeah.
That's how much they trust me.
Yep.
If I'm handling a mortgage, they know that the buyer is going to the closing table, especially if they are the one, that they were pre-approved by me. So the biggest difference between me and my competition and all the newcomers and everyone out there is I have zero loan denied in my entire career for somebody that had pre-approved.
Wow.
So you come to me, you say, hey, I want to buy a house. Let me go through the pre-approval process. I look at your document, I issue you a pre-approval letter. That pre-approval letter signed by me is equivalent to a cash offer.
Nice.
So you go and sell that, there's no going back. You have your house under contract, there's no fall through. We are closing that house.
Yeah.
There has been zero instances
Yeah.
where I was like, oops, I made a mistake, I can't do the loan. No.
Yeah, and
Unless the buyer buys like a new car.
Oh
the day
yeah,
before
yeah.
the closing.
Even
or get
that,
fired.
yeah, even that, that hasn't been the case because once we start the process, I tell my clients what to do, what not to do, and things like that.
Yeah.
So,
And as a realtor, I can vouch for a couple of things here. Is like it's very important. I think as a real estate agent, you are looking into lenders to do their part most of the time, right? And you meet your client a lot in real estate. Like as a realtor, you are meeting them. Lenders are always the back end of it, right? Usually they're on the phone and the laptop. You don't see them in person. But we get questions, a lot of lending questions. And for me to be able to say, hey, talk to the lender, that means a lot, right? If I don't get lending questions, then I can focus on searching more houses, right? And I've worked with Mitesh here, and I can vouch for a couple of things that he mentioned is like, if it cannot be done, it cannot be done.
Right.
Right. I have had instances with lenders where pre-approval is like nothing. You know, they'll just hand it over to you.
Yeah,
But
yeah.
down the road,
Yeah, I've done that too. Where
yeah.
like I'll just give them my W-2 and they're like, okay, you're good. They won't check anything else.
yeah, some lenders, right? I don't want to call names, but the big companies, right?
You can call them out. It's okay. No, I was kidding.
Yeah, somebody, with the rocket mortgage, right? So they came up, they basically call them and say, hey, my name is this. I make, 70, 80K a year, whatever the income is. Oh, you know what? That's nice. How much do you need the pre-approval for?
Yeah.
They just send it right out.
Yeah. And that means nothing. Just because once the loan process starts, you might get denied from the loan.
yeah.
So now your option money, you are losing money on options. You might get your earnest money back, if you have a good realtor where the contract is set up right. But there are instances just because of the lender, people have lose the earnest money. And those are a couple of thousands,
Yeah.
Option money, it might be usually in hundreds depending on the house. But I have, due to the lender's mistake, like they gave you the pre-approval and we are already under contract, option is ended. We have the day like, hey, we will get an approval in 10 days. On the 11th day, lender comes in and say, hey, we can't do it. And now they both lose their earnest money. And that demotivates a lot of people, and they might not be like, okay, I think I'm better off not buying any houses, right? So those are very important things.
Yeah.
And
Every month I get at least one or two deals that somebody screwed up, They call me,
And you need to
hey,
fix it.
Yeah, I try to fix it, but I can't,
Yeah.
So and they basically end up losing their earnest money, the inspection fee, the appraisal fee, and the time,
And that's a
the-
cost, like that's a time for realtors, and it's just not impacting buyers. It's impacting everybody.
Yeah, and it's not just about the money; it's about the emotions, right? You have a family, you have your kids. You show them the house, they
Right,
build the
right.
dream. They
You already
plan about
imagine yourself
moving,
living there,
They,
yeah.
I'll
they
put
imagine
this
about
furniture here.
yeah. The kids imagine about going to this new school in a new neighborhood, and
Yeah.
playing their scooters on on this street and whatnot, and then dad gonna come home after 15 days and say we could not buy the house because the lender screwed us up. It's never a good conversation to have.
Yeah.
So
Wow.
Yeah, that's pretty cool. And now I think let's switch back to the side of investments, right? We have seen, like I have seen a lot of invested in properties this might be a little bitter question for you. Where in during COVID times, right? And now we have seen a little bit of market correction in terms of prices, right? In terms of prices, and there's a little bit of a freaking like, oh, we need to sell, right? But at the same time, they are not probably gonna get the same price that they are getting. What are you suggesting to them right now? What do you think that they should do right now?
Don't sell it. So you only lose if you sell, right?
Yeah.
So so
It's the advice I follow for my stocks.
yeah, same with me.
So even though I'm in the minus, I'm not in the minus if I haven't sold.
You don't sell it, right? Same with the house. So again, it boils down to what kind of investors you are, right? Why did you buy the house? Did you buy it to flip it? Did you buy it for your long-term wealth? So me personally, I like to buy and hold for a long run. So yes, I have bought properties at a X amount of sales price, and it has gone down slightly, given the market situation and everything. But I don't panic. I mean, there's renter living in that house. They pay monthly rent. I don't have to pull any cash out of that property. I don't have to sell. So, I mean, sooner or later, it's going to go up, just like everything else does, So just be patient and, before you buy it, I mentioned cash flow earlier.
Yep.
You always want to, make sure there's positive cash flow, after all your maintenance and everything, and you need to evaluate how much equity you're building depending on what kind of loan, what the rate is, how much of the mortgage payment is going towards your principal every month. You have to evaluate all of that before you invest.
So in today's market, do you think in the lending perspective of it, do you still see deals that are actually cash flowing?
Yes and no, because if you buy, a regular house using a conventional or regular financing, and you put a long-term, tenant in there, you're probably not going to cash flow unless you come up with a huge down payment, like 40-50% down. Then yes, you can still cash flow. But if you're barely making like 20% down, given the high property taxes here in Texas, the insurance rates are off the roof.
Sure.
It's very hard to cash flow doing a long-term rent, but you can be strategic and do a short-term rental, do Airbnbs and things like that. Talking about Airbnbs and FIFA coming to Dallas, I mean, these properties are making a lot of money renting their houses, So it depends on the property and the use, So you can still cash flow your, if you either put a high down payment or, do a short-term Airbnb kind of things or, things like that. So.
I think one last question in terms of investment side of it is, it's a first-time home buyer topic is very high and everybody talks about it, right? So I have some money sitting on the bank and I want to invest in real estate, right? What do you think will be the good idea at this time with the market and all that stuff, right? How do I be a real estate investor? Just because I think we are in a phase in mostly in our community where people have ample amount of money somewhere, but they don't know how to get into the investment side of it, right? So what do you think is a good start for the investment part of the real estate?
Yeah, I mean, I would say start off from a small single family, one-story house. I say that because it's easy to manage, right? So rather than buying a big house, you can start off with small properties, right? And then eventually you can go into multifamily, and then you can invest in commercial. It just depends on how much investment that you have, what your experiences are. You can even do Airbnbs and some other creative properties for events and stuff like that. So I would suggest to start off from a single family home.
Okay. So talking about investing, what are some like common mistakes you see from first-time investors? Like, what are the things you should be really careful about?
Again, it comes down to cash flow, right? People get excited about investment all the time, and they just jump in without doing their homework.
Okay.
Right. So that's when a good realtor comes into play, right? Just like when you're making an offer on a house, they have tools, to figure out how much the house is worth. Similarly, they have another tool to tell you how much the rent is for this particular house, how much rent you can generate, how much you can rent it for, and how much you can talk to a lender and see how much the payment would be. How much variability is in the tax for that particular property over and over, every year. Is the tax lower because if the owners are, have an exemption of over 65 age limit. So maybe that's why the taxes are low.
Yep.
And once you buy, the tax rate's gonna go higher. So
Right.
those are the things you need to evaluate. And a good realtor and a good lender can help you with that. The lender can help you with the payment and the cash flow. The realtor can help you with the comps and the rental value and everything. So you can make a wise decision.
So what would you value more? Let's say I'm looking to buy a house, and it's or property, and it's in a kind of growing area, right? Let's say you were able to get in on Frisco. I mean, we're in Frisco, so let's say we were talking about Frisco maybe 10, 15 years ago, right? Right when the boom was kind of starting. So, what would you value more? Is cash flow always king, or do you also look at kind of that long-term growth?
Future equity
Yeah. Like, what are you looking at when you're buying?
As an investor, you need to be looking at both, right? So,
Which one's worth more?
Which one would you prioritize?
I love cash flow. Right? So,
Okay.
the reason I say that is as long as you have cash flow, right, you can hold the property for a long run. If you're going negative, then, the example we talked about earlier, people want to sell and, get rid of it, right? But if the cash flow is there, you can hold on to the property, right? And you may have a 30-year loan. So you can, if you wait 30 years, the house will be paid off, even though it will definitely appreciate in 30 years.
Sure.
But it may not go from, $300,000 to $3 million, but, it's going to appreciate at some degree, right?
Sure.
And once your house is paid off, whatever the, the valuation is at the time, that's your free money, right? Your renters basically paid for it.
Right.
But, I'm in huge favor of cash flow, because if the cash flow was not there, then it won't let you hold that property for until it's being paid off, right?
Yeah, I think, and it depends on the situation as well. I am kind of not agreeing to Mitesh here. Like, I think I'm more of an equity guy in terms of investment. That's where I look at it. Whereas, like, cash flow, I might. So for me, big thing is like $100 a month or $200 a month or $20,000 or $30,000, right? So I think it's depends on what perspective you are. Are you willing to chip in a little bit of money, like during where the negative cash flow is, right? So I think those are the things, and it depends on it might be a subjective thing as well.
Yeah, exactly. I mean, I'm not saying I don't like the appreciated asset.
No, he likes $100,
right?
not $10,000.
He prioritizes that, but I prioritize different. Is all I'm saying.
Yeah.
And I could be biased again, right? Lenders love cash flow, right? I mean, they don't.
You can approve the loan.
Yeah,
right?
they are not into what the property would be in next 10 years.
Right.
They are
I think
like
that's where the difference
exactly,
is between the realtor and the lender.
Exactly.
We're thinking maybe from like outside of the lending perspective. I mean, that's it's the reason I ask is everybody talks about hey, you got to make sure you're making money right away. But is that like always the thing? Because then I look at investors who are like, hey man, you always got to look at the long term, because you're never like buying a property for like 1 year, 2 year, 3 years. But what you're saying also makes sense. In order to get to the long term, if you're not at least breaking even or not giving yourself that leverage, then you're kind of bleeding, yourself.
And
right?
it's all about the quantity as well, I think, right, Mitesh? Right. So you get one property. I think now I'm shooting myself in the leg saying this, but if you have a cash flow, you can go out there and get another investment properties.
Yes.
Whereas if you have negative cash flow, that might not be the case. So I take back a little bit of what I said.
That was not even 2 minutes. You didn't even stick to your opinion.
And what end up happening is, once the negative cash flow starts hitting you, it kind of demotivates you. Especially if you're a first time investor.
What you're saying makes sense. More mentally.
Exactly.
And I think just from a numeric perspective, to give yourself that runway kind of makes sense.
Yeah.
So talking about cash flow, one of the very common things that I see online is this 1% rule. So can you explain what that is, and if that's really a thing? Is it important?
You caught me off guard on this.
So have you heard of like this 1% rule where they say like, anytime you buy an investment property, right? You want to make sure that you're collecting in rent 1% of that purchase price every month. So let's say you buy a property for $100,000, you want to make sure you're collecting $1,000
$1,000 a month.
every month. Have you heard of like anyone do this?
I haven't heard that, but thinking about it now, $300,000 house every month you have to be collecting $3,000.
Yeah.
That would be a good thing to have,
Yeah.
I mean, that's what a lot of say. Like for an investment to be
Yes.
worth it, they chase after that 1%.
1%.
It's really
And
hard to do on a single family house,
it
to be
makes
honest.
sense.
Yeah.
In terms
yeah,
of
it makes sense. I would love to, I would love to get 1%, just like you mentioned, but I haven't seen that, especially in this market.
Yeah.
That
With single family, it's really tough.
Yeah.
Yeah.
But
Yeah.
with multi and
Yes.
I think particularly with multi, that might be possible given the vacancy.
Yeah, I'm calculating on back of my head. I'm calculating my property's worth and how much rent I'm collecting. And
It's not so much what it's worth; it's what you bought it for.
It's close. It's close. You know, so based on my experience, given the DFW market, if you buy a house for $300,000, you can collect somewhere from $2,200 to $2,500. I would love to collect $3,000, but as long as it's cash flow, I think it should be good.
Okay.
So I think in terms of I think let's shift the focus towards the business now. I know you mentioned that you guys do a business loan as well, right?
Yes.
So if I want to get a strip mall tomorrow, how do I apply for it?
How do we raise money for DBT podcast so we can take this global?
Nice question.
And are you willing to underwrite that, or are you willing to broker that deal?
Yeah, I mean, I would love to, right? Nice. So, if you guys have any, real estate you're looking into,
Yeah, look, we're here. We have a conference room. This is our studio.
Yep.
We can
We have a little bit of equity in the cameras and equipment.
Yes.
we can talk more offline about this. I don't want to make any commitments right now, but I can definitely help you guys with that.
Okay.
So what is your question about the business?
Yeah. So business loan, what is it different, or how is it different than the residential?
Yeah. So residential
property things, right?
Are you talking like commercial loans?
Yeah. Commercial business loans.
So on the residential side, most of the loans are bought by the government, right? Freddie, Fannie, conventional, FHA, all these loans, and they have underwriting guidelines put in place. And your loan has to pass that guidelines for them to be able to buy that loan and free up the money from the investors, right? But commercial is completely different. Commercial loans are not bought by the government, right? It's the lending institution, and the guidelines are completely different. On the residential side, it's more about you, your income, and your credit and things like that. On the commercial side, it's more about the cash flow. It's more about how much money that shopping strip is generating in terms of rent.
Nice.
Don't get me wrong; they still want to look into your income and credit and everything, but the cash flow, the revenue, the operating income part plays a major role while approving the commercial.
Okay, I think now
maybe one last question. We talked about the down payment on the first-time home buyers. How does that change when you go to commercial loans?
There are some options. What we have is something called SBA loan, which is equivalent to FHA loan in the residential side, given is backed by the government and things like that. If you have a SBA loan, you can come up with the lower down payments, like 10-15%, depending on the project, and there's some additional requirements for that. If you're talking about conventional, it starts with 20%, depending on the project, the size. Lender may ask for 25, 30, sometimes up to 40% if there's a high risk. If you're just buying a land without any real estate in it, they typically ask more down payment because land does not produce any income. Unless you go there and ask for construction loan with the defined projects and plans and everything. So it just depends on the project. So basically, commercial, I would say start up with 20%.
Got it.
if you're planning something.
Yeah, I know we talked a lot about the lending side of it. Mitesh is also really big in our community in terms of doing service to the community. He mentioned earlier in his intro as well, he's a VP currently for Nepal
Yes.
Chamber of Commerce. As a business owner or entrepreneur, why do you think it is important to give back to the community or be a part of the community?
Yeah, I mean, that's something I always, look for, preach for, and I practice what I say. So, we over last 10 years, I have done enormous amount of volume and, helped thousands, it's more than thousands home buyers. And all these people are from our community here. Most of my business comes from the DFW area, and especially Nepalese community, right? And I believe in giving back to them, and there's a when I came into the industry as a loan officer, there was no other loan officer speaking Nepali language, right? I don't want to call I was the first one. There could be
Someone else.
someone else, but not that I know of, right?
Sure.
And I bring this up because right now there's like, I don't have the exact number, but close to 50 loan officers
Or 100.
or hundreds, and so being giving back to community is how I grew over time, from opening my own company to I have like 15 16 other loan officers in my company. To go into that, every this is all about community, right? It's the people, it's our people that help me get there.
Nice.
And I have a moral obligation to serve them and give something back to them, right? And I'm not affiliated with a lot of organizations, but I do, I like and I've been involved with Nepalese American Chamber of Commerce because this is something different than any other societies, because this is business driven, business focused, networking, promoting, small businesses, especially the Nepalese businesses, and I've been with the organization for almost 4 years now, and right now I'm serving as a vice president.
Nice.
And the good thing what we do in this organization is we bring the business people together. We organize different events, and all these events are networking events. You can come in, meet other people, share your ideas, and you could be looking for a plumber to fix a leak in your house, and rather than going and finding them online, you can call us.
Oh, wow.
We can connect them to you.
Nice.
Somebody coming from a different state may need a realtor. We can connect them to you.
Nice.
And we host a lot of events, where people from different background comes in and share their ideas, share their business, and it's wonderful.
Nice. So I think to wrap it up, if do you think we should? Do you have anything that we think we missed that you want to talk about?
No, we covered pretty much everything. I just have tips or a suggestion for young first time home buyers. So basically, there's, I don't want to call it a loophole. Don't want to sound shady or anything, but basically what you can do is buy small if you're young. If you're just growing your family, you don't have kids yet, or even if you're single, not married, just buy your first home using like 5% down. Or you can even get like a fourplex, multiplex, duplex, live in one unit,
Rent others.
acquire that property, rent the other units out, or even if it's a single family, just buy it, live there for 1 year, and you can legally buy another house using only 5% down. And you move.
Wow.
And I say young people because it's easy for them to move, right?
Sure. Yeah.
You don't have to worry about the kids' school district. You don't have to worry about the, all these things you have bought in your house, moving, and you go to the second house, come up with 5% down, buy a second house, live there for 1 year, move into the third one. You do that every year.
Oh, wow.
All you need is 5% down, right? $300,000 house, you're looking at $15,000.
Yeah.
you know.
Yep.
And by the time 10, 15 years, you would have collected like 10 or 15 houses.
Yeah.
It would be a good retirement, isn't it?
Yeah.
I mean, your
I mean,
renter's
that's
gonna,
nice.
Yeah.
Especially if you like can do that on
Yeah.
a joint income. Let's say you're in a serious relationship or you're married, right? Let's say you're married in your
Yeah.
mid-20s. Then what you're saying is with this plan by 40s you can
Exactly.
have good
Versus,
cash flow.
I say that because, to buy a house as an investment home, you have to come up with at least 20% down.
Yes.
Your rates are higher.
So buy it as your
have-
primary home.
Yeah, just buy it as a primary, live there for 1 year,
Yeah.
and legally you can move out from 1 year and turn that into investment.
See, I wish somebody told me this like 10 years ago.
Yeah, yeah.
I would have at least had, I think, like 3 or 4 houses
Yes.
at least.
I think now with the upcoming generation that might change. Like I mentioned, the last question that I want to ask is, you mentioned about being a brewer someday, right? Do you think that we'll be drinking some IPAs or something? Do you have plan to
Yeah,
get on that? I know
When
lending
do
is
when do we visit your brewery?
Brewery,
Yeah. So the short answer is when I retire, basically. Right?
Nice.
So right now, I'm dragged into too many things right now. I mean, I would take that as my passion. I would wait. I would formulate my recipe with a smaller batch in my garage, maybe.
Yeah.
And once I retire, maybe I can buy a brewery and do my own,
nice. Well,
recipes and things like that.
we look forward to doing a podcast in Mitesh Breweries.
Yeah.
But for now, we'd like to thank you, Mitesh, for giving us time. And I think right now we are getting out of the lending side of the business. If you have any questions, we'll put his website, his information on the description as well. You can always call them if you have any questions. His company is great. Like he mentioned earlier, there are 15, 16 lenders there as well. So they can always, you just got to pick up the call or write that message to them and they'll definitely be sure to help. With that, and with the promise of doing a podcast in his brewery,
Yes.
we'd like to
It's on
check
camera,
out
so
for-
Yeah. So I don't know how many years it's gonna take,
Yeah.
But definitely,
Yep.
that's something I love.
Time will pass. So
Yes.
one day for sure.
Yeah.
One day for sure.
Okay.
And with that, check out for today.
Thank
Thank you
you.
for watching
Thank
us.
you so much.